Before we start this video, do like and subscribe to our channel and not miss on any updates.
Hello dear students. So since yesterday a lot of discussions around Index 115 and Index 12, I typically would not want to come out with a video at this point of time because you are at a very critical juncture for your examination, but still I thought I'll give you a clarification. 115, I've released the video which I had recorded for the regular class including the November 24 solution that is available on YouTube, and for Index 12, Institute has changed the solution for this, and a lot of us have interpreted that the new solution is better and correct than the older solution. This actually is a wrong solution. And I am not making this statement just like that. This is wrong because of 2-3 reasons. I'll tell you logically, quickly, without wasting too much of your time. First thing, they say that carrying amount of share-based payment is 0.8 or 1.6 into 1 by 2. Now tell me one thing. When we talk about carrying amount in Index 12, we have either a carrying amount of an asset or a liability. How do we get the carrying amount of a share-based payment, which is actually a part of your equity? That is the first thing. Second thing is, you don't do the accounting based on intrinsic value. If you see the question, you don't do the accounting basis intrinsic value, you do it basis the fair value. Not only that, I'll show you one more document. This is the educational material published by ICCA in February 24, and here if you see, similar question, slightly lengthy question actually, much more detailed question, and if you see they have said ESOP expense is so much, ESOP reserve is so much, 250, 250, 250, 250, 500 and 750, that is the ESOP expense and ESOP reserve, because ESOP expense, if it is an equity based transaction, equity set, because ESOP expense, if it is an equity settled transaction, you will take it to ESOP reserve. This is a part of your equity, not a part of your liability. That's the first thing. Okay, here also tax is based on the excess of fair value of equity at a future date over the exercise price. This is nothing but the intrinsic value. Now, if we come now, here, book base 0. So why is book base 0? And how will you have book base, or how will you have a carrying amount of something which is not a liability? It is not a carrying amount. So the book base is 0 and tax base is computed based on this intrinsic value for the number of years over which you get the deduction. And considering the difference between 200 and 0, you multiply a tax rate of 30%, you get 60. That is what is recognized as BTech. Don't worry what is recognized in P&L, what is recognized in equity, that is a separate discussion. But for this question that we are talking about, very important for us to be clear that this new solution does not, justify the logics. There is no logic where they say that carrying amount of share-based payment is so and so, whereas it has to be actually 0. And tax base they have considered 0. See, tax base is the amount. What is tax base? Tax base of an asset is something that you will get deduction in the future. So the tax base, which was the earlier calculation, that is absolutely correct. No need to worry about it. That is the correct solution. Finally, you will get the DTA, which is the same number in both the cases. Okay. Small clarification so that you don't get confused at this point of time. Now, at this point of time, you should not be bothering about, this has changed, that has changed. We are just 10 days to the examination. Give your full heart for the revisions that you're doing, practice that you're doing, and you will do good in the examination. All the best.